the commercial real estate industry facing headwinds because of COVID, one bright spot has been hotels and hospitality. JLL out with a new investor survey. Even though deal activity has been slow this year, it is showing that more than 80% of investors expect to be net buyers this year within that sector. Joining us now, JLL Hotels Hospitality America's CEO, Kevin Davis. Thanks for coming in studio,
I appreciate it. I'm glad to be here.
It's new digs here for us, and you're one of the first people who's come in. So what really stood out to you from that survey? Because, as I said, it has been a tough year for investment in hotels. Is it rates that are changing the equation?
Yeah, so I think investors are increasingly optimistic from a rate perspective. We just had a benign CPI report, PPI report earlier this week, suggesting that inflation may in fact be under control. So I think there's the view on the part of many investors that the worst of the rate hikes is over, and in fact, we could see some rate cuts next year, which means that investors are a bit more optimistic. The cost of capital, the cost of debt will be lower. So I think that could ultimately drive more investors to be risk on. And we've seen that in our hotel investor survey, which we released, which to your point, over 80% of investors indicated that they expect to be net buyers of hotels in 2024, which is the highest that we've ever had in our survey in over 20 years of conducting the survey.
And a lot of that, is that really, Kevin, just it's a rate story? They just think rates stay the same or they head lower next year?
Yeah, I think part of it is a rate story. I think part of it may be a story of distress and the expectations that there could be some distress in the marketplace, in which case I think investors are looking to take advantage of that. If you look back during the COVID period, there was an expectation that there'd be a significant amount of distress, which never came to fruition. But a lot of capital was raised to take advantage of that. You fast forward 3 years, we're in the midst of an aggressive Fed tightening cycle, and I think the same mentality holds, which investors expect because rates are higher, the value of many assets will go down, and therefore you could have forced sellers and there could be distress. And so I think that's part of the thread. It's perhaps a more benign rate environment, but also the possibility of distress.
What does all of this imply about demand for lodging, right? We've been looking at some analysts who cover the industry who seem to be pretty optimistic about that side of the equation. But it's interesting because at the same time, we're seeing some cracks in the economy perhaps and concerns about spending. So how square that for me?
It's really interesting. There's been this dichotomy over the past 14 or 16 months where you have a very challenging capital markets environment driven by higher rates and the Fed tightening cycle, but an incredibly strong fundamental operating performance environment in hospitality. People post-COVID wanted to travel, and they took to the road and they took to the skies and they took vacations, and we've seen operating performance of hotels increase pretty significantly. So nationwide, we're up about 13% in RevPAR relative to where we were in 2019, which generally tends to be our benchmark. So if you look at the industry broadly, hotel resorts, which recovered first, are up. We've started to see a moderation in the recovery in the resorts, but what we're experiencing now is a strong recovery in urban markets. So cities like New York, Chicago, Boston, Washington, D.C., those urban markets which recovery lagged, you're starting to see that recovery take hold.
And as you guys look for maybe some hotel investment to pick up next year, Kevin, is there certain subsectors you'd really expect to see that activity? Is it luxury assets, for example, luxury hotels? Is that where you'd be looking for it?
Yes. So we've really seen it at the extremes. We've seen strong investment activity in luxury assets, and we've also seen strong investment activity in select service and extended stay assets.
What is select service? What is that?
So those are generally assets that don't have food and beverage. There's typically no room service. There's typically not a 3-meal restaurant. So it's usually a rooms-only product. So it's not going to be as expansive with the banquets and catering, et cetera, that you would see in what we call a quote-unquote full-service hotel. And then extended stay, that product will frequently have a kitchen, and it's much more conducive for
business travelers.
Business travelers, long-term stay. And look, the interesting dynamic that we're seeing is with people having greater flexibility around work, they're generally taking longer trips. And when they take longer trips, they'd like to stay in a location which feels a bit more like home. So a bit more space and again, the optionality of having a kitchen. So we've seen really strong operating performance and investment performance in the extended stay space.
And sort of on a related note, as you see perhaps an unlocking of this investment start to happen next year, what do you expect to see sort of the biggest trend where that money is going to be flowing in terms of the features, perhaps, of either new properties or revamped properties?
Absolutely in urban markets. If you look at our survey, 84% of the investors surveyed said that they would focus on urban markets. And within urban, it will be higher quality hotels, what we call in the industry upper upscale and luxury product. Those sorts of assets, I think, will perform, one, incredibly well, and I think we're going to see a tremendous amount of liquidity and investment volume into that space.
Is there, just to sneak this in, is there any like hot new amenity that you think hotels are going to be adding that maybe we don't know about?
Hot new amenity, that's a great question.
Sorry to stop you here.
Look, one of the interesting promises, I think, is the greater integration of AI and the predictive ability of AI to be able to deliver a more personalized guest service. And that's something that owners and the brands are working on. So in the future, I think when you check into a hotel, you may actually get an experience that caters to your likes based on past stays. And I think that's something that's going to ultimately make the travel experience much more fulfilling for our guests.
Well, that's interesting.
All right, Kevin Davis, JLL, thank you for joining us today,
Thank you.
Kevin.
I appreciate
it so much.
Enjoyed it. Thanks.